Most homeowners do not know exactly what is inside their home insurance policy. They know the premium, they know the deductible, but they may not know which coverage limits actually match their property and which ones are simply part of a standard package. That matters because a bundled policy can be simple, but it can also mean paying for limits you may not fully need while missing coverage that matters more for your situation. Square One uses a more customizable model. Instead of treating every homeowner the same way, it lets you choose certain coverage types, limits, and deductibles based on your property. But that does not mean it is always the better choice. This is not about saying one model is always better. It is about understanding when a bundled policy fits your risk, and when a more customizable model may be worth comparing. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to explain how a customizable coverage model actually works, when it may produce a better outcome than a traditional policy, and when a traditional insurer is likely the stronger choice. Traditional home insurance policies are built around a standard package. That package typically includes dwelling coverage, contents coverage, liability coverage, and additional living expenses. Most insurers offer add-ons, but the base package is largely fixed. The advantage of a packaged policy is simplicity. You get standard coverage without having to think through every option. The disadvantage is that the standard package is built for a broad population of homeowners and may include standard limits or components that do not perfectly match your property. A customizable coverage model lets you build a policy from components. You select dwelling replacement cost, contents, liability, and other coverage types individually, and set the limits that match your situation. Square One is one Canadian insurer offering this kind of model. This approach may produce the most value in 3 situations. First, condo or strata owners with an existing master policy. If your condo or strata corporation already insures parts of the building structure, your personal policy should be aligned with what that master policy does and does not cover. A customizable model can help you adjust building or unit improvement coverage to better match the actual gap, rather than duplicating protection the corporation already provides. Second, homeowners with lower contents value. A traditional policy may bundle contents coverage at a fixed level. If your actual contents are worth significantly less than the standard limit, you may be paying for protection you would never fully use. A component model lets you set a contents limit that reflects your actual belongings. Third, homeowners who want to prioritize liability coverage without automatically increasing every other component. Traditional bundled pricing can make it difficult to increase one component without affecting others. A component model may give you more flexibility to adjust liability limits independently, which matters for homeowners with specific liability priorities. There are also situations where a traditional insurer is likely the better choice. Older homes with complex risk profiles benefit from working with a broker who can place coverage across multiple insurers. A customizable model works best for a standardized risk profile. If your home has older systems, a non-standard construction type, a prior claims history, or sits in a higher risk area, a traditional broker with access to a wider panel of insurers may find coverage options that a single component model insurer cannot match. Properties in rural or semi-rural areas may also be better served by traditional insurers who have broader appetite for detached homes, outbuildings, and the specific risks that come with acreage. And homeowners who value simplicity over optimization may find the component-by-component approach more demanding than they want. A packaged policy from a traditional insurer requires fewer decisions at each renewal. Here is the reframe. The question is not which insurer or model is better. The question is whether your current policy coverage actually reflects the risks specific to your property. Most homeowners accepted the coverage that was offered to them at their first renewal and have not reviewed it since. Whether the right answer is a customizable model or a traditional policy depends on your specific property profile, existing coverage, and risk priorities. It also means being honest about what you actually use and what you do not. Most homeowners who have been in the same property for 5 or more years have never reviewed whether their coverage limits still match their situation. The contents limit set at the time of purchase may no longer reflect what is in the home. The dwelling replacement cost may not reflect what construction actually costs today. The liability limit may not reflect how the property is used. A review before renewal is not about distrust of your insurer. It is about making sure the policy you are paying for is the policy you actually need. 3 questions to ask before your next renewal. First, what coverage types and limits are included in my current policy, and which of those actually apply to my property situation? If you are in a condo or strata unit, review what the corporation's master policy covers before deciding how much dwelling or unit improvement coverage to carry personally. The gap between what the master policy covers and your actual personal exposure is the figure your policy needs to address. Second, does my contents coverage reflect what I actually own? Contents coverage is one of the easiest components for homeowners to overestimate in a standard home insurance policy. A homeowner who has moved into a smaller space or owns modest furnishings may be paying for a contents limit they could never realistically claim against. Third, have I compared both a customizable policy quote and a traditional broker quote for my specific property? The gap between the two depends heavily on your risk profile. For a straightforward condo in an urban market, a component model may produce a meaningfully lower premium. For an older, detached home with prior claims, a traditional broker with access to a full panel may be the more cost-effective path. Running both comparisons before renewal gives you the information to decide. Your current home insurance policy may include coverage that does not perfectly match your property and may exclude or underweight coverage that matters more for your situation. The free homeowner checklist is in the description. It covers the coverage questions worth asking before every renewal, including the ones most homeowners never check. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.